Hi, in this very brief video, I'm going to answer one very straightforward question. What is the right time to invest into stock market? And this question have another portion of it, another piece of it, or maybe just a mirror image of it, which is what is the right time to come out of a stock market or sell your stock investments? And the answer is very simple, which I give to everyone and also apply it to myself. And the answer is every time you have money, surplus money, we all make money, we spend some of it, and then we save a good piece of it. So, whenever you have saving left with you and you think that this is a surplus money which needs to be invested, 30% of it you can invest into stock market. And every time you need money for what reason? For any reason, any personal emergency. It could be probably the stock which you can sell. You cannot sell your house all the time. Sometimes you need a very small amount of money. Every time you cannot think about breaking your FD. But the stock is something which you can sell anytime, some piece of it. Those stocks probably which are have already given you very good return, or you can also think about dumping those stocks which now you are not believing into. But yes, every time you need money for your personal reason, you can think about selling it. So it might be sounding that, wow, this is not a rocket science. Everybody knows it. Yes, everybody knows it. But very few of us practice it. In fact, most of the people, they don't do it. What they do it is they try to time the market. When Nifty was at 18,000, everybody was like, okay, this is the time to invest. And I'll invest it because since Nifty has come from 8,000 to 18,000, there's a high chance it will go to 22,000 and these stocks will keep on going higher, higher and higher. So even some people I know who took debt and they invested into it. Well, this is a completely unhealthy process. So the philosophy is very simple here. The philosophy is all about what you can control and what you cannot control. Well, when we try to time the market, what we are trying to say that we can control the macro factors. Let me ask this question, in fact, from you. Can you stop Russia-Ukraine war? No. Can you control the inflation? No. Do you have a control over the interest rate, whether it should be increasing or it should be decreasing from here? No, RBI will do that. So there are those factors which impact our economy and they're not in our control. So if those things are not in our control, how can even I think about timing the market? So all you need to do is do what is in your control. So what is in your control? In your control, you have your discipline. What is that discipline and how this discipline will protect you? Well, this discipline will help you control your greed and fear. These two enemies of any stock market investor or trader. So my greed and my fear is in my control, and what I can do is I can follow a discipline of investing on a regular interval of time. That could be monthly, that could be quarterly, and invest in a very, very long term into those good stock, fundamentally correct stocks which we believe in, stocks of those companies which product or services we use. We will talk about this in some other video. This is about timing the market video. So you never ever have to time the market. And doesn't matter Nifty is at 18,000 or 16,000 or 14,000, you have to keep investing in a regular interval. And the philosophy behind this is very simple, which is based on controlling the controllables. So you cannot control the economy, and that's why you cannot control the market and you cannot predict where market will head. But certainly you can believe into equity as an investment class and can think about investing 30% of your savings into stock markets across 7, 8, 9, 10 stocks and make your portfolio. Why I'm making this video is because that right now global market are crashing and there is an anticipation it will crash further. Nobody knows that. If everybody knew that market will crash from here, everybody would have sold everything and in no time market would have gone to probably the same level of 10,000, 11,000 Nifty. But still market is divided into two parts. Some people are buying, some people are selling, and they are doing it as per their need. So this is what you also have to apply. I'm talking about all the big players, even they do the same thing. When they understand that this is the time when they have to take risk on their portfolio, they go and pick up good stocks, doesn't matter where exactly is the market. And when they think that some other asset class or for some other reason they have to come out of the equity, they sell their equity or they lesser their portfolio of equity. Well, in my complete course of Indian stock market, this is one of the chapter also where I have given a framework that how exactly you should proceed into stock market if you are a beginner. If you are just planning to start your investment journey into equity market, how exactly you can go ahead and participate into it without timing the market. Well, on that note, all I want to say that believe into your own research. Don't fall in the trap of greed and fear. Don't fall in the trap of all those news, which could be fabricated news. Don't believe in those tips and be a smart, intelligent, cautious investor who is not taking any decision because he simply want to get rich quick. There is no such scheme. It is certainly not into stock market. Companies take time to build their strength, to build their edges in the business so that they can sustain, survive for a very, very long term. So it will take time that your portfolio will also give you a return. And you should look into equity just like your other asset class like house or maybe even the fixed income products where you think about a very, very long term and invest into it. So yes, doesn't matter you are investing at 14,000, 16,000, 18,000 or 10,000 as Nifty, you can still make money in a very, very long term. All you have to do is make a good portfolio. In the next video or some other video, I'll give you the similar kind of tip that how to, based on certain philosophy, our common life philosophy, control factor philosophy, in fact, that how you can pick up even the stocks and make your portfolio. But that is something which we will talk into some other video. Well, on that note, I would like to thank you for watching this video. Keep investing, but safely. Don't fall into your greed and fear factor, and then only you will become a successful investor. Thank you very much.